One channel carries a fifth of the world's oil, 21 miles wide. In March, it carried almost nothing. February 28th. War closes the world's biggest oil artery. Textbooks say prices explode. Reality was stranger. The auditor logs only the verified. Traffic through the strait, 130 ships a day, to nearly zero in 72 hours. Act 1. The shock. 2,000 ships stranded, 20,000 sailors. Ships were struck. Some seafarers never came home. Insurance hit millions per passage. Brent crude, $61 in January, $126 at the peak. And then, while the war continued, it fell. Hold that. At the worst, physical cargoes traded above 140. Agencies called it the largest supply disruption in oil market history. Over 1 billion barrels lost. So why didn't the world break? 4 shock absorbers. Act 2. Absorber 1. Strategic reserves. The biggest coordinated release ever, 400 million barrels. America's reserve fell to a 40-year low. Absorber 2. Detour pipes. Saudi crude ran west. The Emirates pumped around the strait. 9 million barrels of bypass against 20 lost. Absorber 3. China cut imports 40% and ran refineries off a 1 billion-barrel stockpile. The biggest buyer simply stopped bidding. Absorber 4. Pain kills appetite. High prices and war fear cut world oil use by millions of barrels a day. Shortage met shrinkage. Act 3. The pattern history keeps. Since strategic reserves exist, every oil shock has faded. 73 never faded, because no absorbers existed yet. They were invented after. The 80s tanker war damaged 450 ships during a glut. Prices fell anyway. Barrels beat bullets when barrels keep moving. Honesty beat. The pattern held because oil kept flowing. This time, it stopped. It took every absorber at once, and it barely held. Act 4. This week. July 7th. Ships struck near the corridor. Strikes resumed. Party claims conflict on who broke what. Crossings fell from 45 a day to 5. And yet Friday's close, Brent 76. Stocks near records. Volatility asleep. Markets are pricing a truce mid-gunfire. Why so calm? Forecasters now warn of a glut, stored barrels afloat, weak demand, and every model assumes the valve reopens. That calm is a forecast, not a fact. Analysts say a lasting closure adds $10 to $15 or rewrites the models entirely. What the valve teaches. 3 lessons. Modern shocks fade only while barrels flow. Reserves are an airbag. This one has been used. And calm is not safety. A fifth of the world's oil still waits on 21 miles of water. Both sides claim the channel. The gauges just record. A developing story. Our numbers are dated July 10th. This has been the Meme Economy. Education, not financial advice. Subscribe.